Everyone wants to be successful and rake in the dough. It's natural. Are you good with finances and numbers and quick to find solutions? Then a career in business management can be your calling. It is way different than a career in investment banking or just as a financial advisor. As a wealth manager, you will have the chance to manage a person's wealth and its different aspects. Most importantly, you will be in charge of your client's well-being as you help them find ways to increase and effectively manage their wealth. So what exactly do you need to do? If you want to know how to become a successful businessman, then this video is for you. Before we dive in, welcome to Financial and Investment Wisdom. Please take a brief moment, go down and smash the like button, subscribe to our channel, and enjoy amazing successful business tips. Now let's get started on our list. Tip number 1, diversify your assets. One of the most important pieces of advice from a wealth manager is to avoid putting all of your eggs in one basket. Instead, balancing your investments between equities, bonds, real estate, and other assets is strongly recommended. This way, even if one of your investments suffers a setback, the rest of your portfolio can still be profitable, and you won't lose all of your hard-earned money. Warren Buffett said, "Wide diversification is only required when investors do not understand what they are doing." Geographic diversification is an additional level of diversification to consider. For example, you can lower your chance of losing money by diversifying where your money is physically stored. Consider, for example, the financial crisis of 2008. It only took the failure of one bank to bring the US economy down. In fact, the majority of Western countries were affected. Having an offshore bank account in Singapore or Hong Kong at a time like this meant you were less affected by the crisis than the average American. Not all banks are created equal, and having a foreign bank account helps you protect yourself if your home country's economy collapses. It's also important to diversify your currency. In times of economic or political crisis, currencies are not stable and are often volatile. For example, the British pound has struggled significantly after Brexit was announced in 2016. An offshore bank account can help to mitigate this hazard once again. Tip number 2, look into offshore options. Most people link offshore banking with the top 1% of the population who spends their days sailing around private islands. However, when you look at the facts, offshore banking is very affordable, but it also provides many advantages. To begin, offshore banking can assist you in making the most of your funds. Furthermore, technology has advanced to the point where you may now open an offshore account entirely online. Offshore banking can provide you with some of the best services available, as well as lower interest rates, more stable economies, and lower taxation. Furthermore, several offshore banks provide direct services to customers seeking offshore business management. While these accounts may demand a higher initial investment than a traditional savings account, the benefits might be highly appealing. Tip number 3, know your priorities. The most difficult thing for everyone to realize out there is that we're in a very complicated business world and that we're all under the same umbrella, and it's really difficult for everyone to figure out where the priorities and loyalties lie, said Scott Bakula. What do you want to accomplish with your company? In terms of money, what are your long-term and short-term goals? Before you start investing and researching in earnest, it's necessary to get your head around these questions. Goals will lead you down different paths. It all depends on your goals. In most circumstances, a financial advisor can help you in achieving your goals. If you share your finances with a partner, be sure you've talked about what you want to get out of it and if you have any key questions or common goals. If you have children or other dependents, remember to include them as well. This is especially important if you face a large financial decision, such as paying for college or putting an elderly parent in a care center. Tip number 4, shop around for the best services. Managing your wealth with the help of a financial advisor can be highly beneficial. It gives you peace of mind, knowing that your money is in the hands of someone who knows how markets work. Having said that, getting a second or third opinion by financial advisors may be worthwhile. Don't hesitate to talk to a few business management advisors to understand better what they can offer you. Please conduct your research and speak with other clients of a wealth management advisor to better grasp what it's like to deal with them. Then, go for it if you believe the value is worth the price. When it comes to fees, it's extremely important to shop around. The fees you pay in your funds, also known as expense ratios, can eat up a lot of your money when it comes to investments. Even little costs, such as 1%, will add up in the long run. It's possible that your present bank or financial advisor isn't charging the lowest fees. Look into other options once more. Offshore wealth management could be a good fit in this case. Tip number 5. Automate your investments. Make sure you're investing on a regular and consistent basis. To build your business and money, you'll need to invest regularly, and an app or other type of digital financial tool can help you do that. Once you've automated your investments, you may invest without fear and only check up on them every few months. Wait, hold on guys. If you have enjoyed this video so far, please give us a like. And don't forget to subscribe to Financial and Investment Wisdom and type your insights in the comment section as you're watching this video. Tip number 6. Reassess on an annual basis. It's important to review your situation yearly or more frequently if you like to get a feel of the broad picture to ensure that your business is working for you. Furthermore, during a year, your original priorities may have shifted. For example, your children have graduated from college and you're beginning to consider retirement. To address this, you'll need to make changes to your current wealth management strategy. These yearly meetings are standard practice if you're dealing with a financial advisor. It offers you a sense of how things are going, and your financial advisor may help you devise a strategy if you need to alter direction. While it's important to monitor your finances weekly or monthly, looking at your finances over the year offers you a clearer understanding of what's working and what, if anything, isn't. Tip number 7. Avoid taking on more debt. At its core, a debt problem is a budgeting problem, said Natalie Pace. If you don't have cash on hand, don't use your credit card to make a purchase. While more than 60% of people in the United States have a mortgage, this is fine. We're talking about consumer debt here. Debt is the polar opposite of wealth, and if you tend to spend more than you earn, it can be difficult to get out of, and it isn't helpful to long-term goals like retirement. If you can't afford it openly, don't put it on your credit card. If you really want a boat or a new car, save up instead of going into debt. It will take a little longer, but you will be glad you did it in the end. Tip number 8. Use peer networks. There should be no financial advisor who is on an island by himself. Carlson instead advises new independent advisors to take guidance from their colleagues and attend industry conferences to benefit from the collective experience of other advisors. Find an organized peer group with whom you can discuss ideas on how to improve your business regularly. Tip number 9. Know your clients. Financial advisors that serve niche markets have an advantage over those who don't, and niches can be an important source of new business in a more competitive environment. Carlson, whose firm serves a significant number of healthcare workers at the Mayo Clinic in Rochester, Minnesota, said, "You're leveraged when you focus on a niche. You'll need to find out what kind of platform you'll need to effectively serve them. Referrals and business growth come from loyal customers," he said. While the financial market is currently in a downturn due to COVID-19, this is not the time to panic. Instead, financial experts recommend that you keep contributing to your investments, retirement funds, and savings as usual. Remember, wealth management is a long-term strategy. Things may be down right now, but no one knows where they will be in 5 years, and no one can predict what the market will do. Managing your finances is not difficult, but it requires doing your homework to make informed judgments. A basic understanding of investments, diversification, and other topics can greatly help. We hope these pointers have sparked your interest in starting your own financial management journey. That's all for now. If you enjoy these tips or want to hear more from us, feel free to add your thoughts in the comments section. Also, hit the like button, and if you're new to the channel, now is a great time to subscribe. Thanks for watching this video, and we'll see you next time right here on Financial and Investment Wisdom. Bye, friends!